One stock just cracked today's top 5 for July 13th. Meta. Meta just posted a monster 5.97% move. That's nearly a $1.40 swing on today's action, with volume at 2.27 times average. What this means? Big institutional orders moved through the market, not just retail chasing higher. Why it matters now? Heavy volume paired with a big up day signals institutional conviction rather than speculation. For retail investors watching from the sidelines, this tells you that professionals think something has shifted in the meta-narrative. For active traders, the critical question isn't whether meta moved. It's whether this breakout sustains or fades by tomorrow and takes your capital with it. We're going to walk through the technicals, options flow, and catalyst picture so you can make a real decision instead of just following the crowd. Meta at $669.21 is sitting right at its resistance level of $677.85, basically knocking on the door of a meaningful breakout. The 50-day moving average is at $600.08, meaning the stock has climbed $69 above that trend line, which is strong. Why this matters? When price is that far above its 50-day average, it means you've got genuine momentum working. The 200-day average sits at $641.67, well below current price, confirming we're in an uptrend. The catch: Meta is 15.7% below its 52-week high, so this stock has serious room to run before hitting previous peaks. Support sits at $540.18, roughly $130 below current price, giving you a meaningful cushion if this reverses. RSI at 66.37. That's in the neutral to strong zone, approaching overbought territory at 70. What this means? Meta has been bought aggressively but isn't yet at the point where a reversal becomes statistically probable. Why it matters now? For retail, think of RSI as a heat gauge. 66 is hot but not yet time to bail. For traders, RSI above 60 in an established uptrend is actually healthy. It shows momentum is genuinely on your side, not fading. The real risk is mean reversion if RSI closes above 70 for 2 straight days. That's when pullbacks typically accelerate. Bottom line, momentum is intact, but you're not so extended that the next move has to be down. Here's the tricky part. The headline says, why is Meta stock soaring today? But the actual catalyst isn't spelled out in our data. Earnings aren't coming up, so this could be sector rotation, an AI headline, or just narrative momentum. What this means? You don't know why the stock jumped. Why it matters now? Without a clear catalyst, this bounce could reverse just as fast if sentiment shifts. For retail, the lesson is brutal but simple. Don't buy a move without understanding what's actually changing at the company or in the market. For traders, lack of a named catalyst is a yellow flag. It means this could be a squeeze that evaporates when momentum traders bail. We need to see this hold $677 as confirmation that conviction is real, not just a technical bounce. The put-to-call ratio is 0.445. That means for every call being bought, roughly 2.25 puts are being sold. What this means? Smart money is betting on Meta going higher and is willing to sell downside protection to fund those upside bets. Why it matters now? Institutional traders, the people who get paid to read markets for a living, are leaning heavily bullish. For retail, this is a confidence signal. The pros aren't hedging downside aggressively. For traders, this tells you that stop-loss levels are being respected and buyers are willing to defend them. The flip side, when everyone's positioned the same way, a reversal can be violent. Watch for put selling to dry up as a warning sign that conviction is fading. The verdict: watch with moderate conviction and an up-direction bias, not strong buy, because the catalyst is foggy and RSI is already in neutral territory. Entry zone is $592.77 to $610.55, basically a 3% dip from here, where accumulation makes sense. Why this matters? If Meta pulls back to that zone, you're buying into strength with a defined risk point. Stop loss, $552.52. That's your hard stop. Anything below that says the setup broke. Targets: T1 at $677.85 immediate resistance, T2 at $717.98 plus 7.3%, T3 at $825 plus 23.2%. Risk to reward ratio of 0.07 means you're risking 7 cents to make $1. Solid asymmetry. Don't chase at current levels. This is a pullback buy setup, not a chase the spike setup. Meta's setup is textbook bullish on paper, but the moderate conviction is justified. We're missing the why behind today's move, and that's a real risk. For retail investors, the takeaway is ironclad. Don't FOMO into strength. Wait for the pullback to the entry zone at $593, $611. Then scale in. For traders, honor your $552 stop religiously and start taking profits into resistance at $677. The options market is pricing another 5-7% upside in the near term, and sector momentum is real, but it can turn on a dime. Manage your risk, stick to your stops, and remember, you make money by not losing it. That's how fortunes get built in this market, not by chasing every squeeze that prints.